All right, we're going to get into the stock market analysis right now. And I am going to do just a tiny little bit of update. First thing I want you to do is look at this slide. This tells you about our approach to the market and the importance of you taking trade ownership of your own trade. So important slide for you to read on before we move on. Well, I just want to remind you that the Black Friday deals are today. You can read through this. This will only be running through December 2nd, so take advantage of these. If you're watching the clip right now and not the whole show, then you can go back and Matt talked about these in detail. All right, stock market analysis, multiple time frame analysis and projections. We'll look at SPX, NDX, RUT, weekly and daily, and the intraday also. And we're looking at, of course, some of the evidence projections in both price and time. We put it all together, and this is very probabilistic analysis. We try to be correct more than 65, 70% of the time. Of course, that's going to make us wrong about 30, 35% of the time, and that's just the nature of technical analysis or any kind of analysis that you do. And we're very proud of overall everything that we look at and the really great analysis that we offer in so many futures and indexes, ETFs, and hundreds of equities that we look at. So if you're just for the first time looking at this analysis, please do consider that you can become a member and see the huge breadth of analysis that we bring all of the time. So the stock market, really quickly this week, it's chopped pretty much in an upside bias. It was a holiday Thanksgiving week, and generally they're very slow, and probabilistically they have upward biases to them. And the market was cheering early on Trump's choice of Bessent as Treasury Secretary, believing that he will offer a buffer to what could be some extreme policies. So the market liked that. The bond market really liked it and moved up on that news, which we were expecting to get an upside move. And the market gave some ground on the announcement of the tariffs, which are going to be on Canada and Mexico 25% and an extra 10% on China, up to about 35%. And of course, there's all kinds of talk that Mexico is already talking, and there may be some changes there, but then Mexico denies it. So we're not going to really know, and we're not going to know a lot about Donald Trump's policies until well into next year or towards the end of next year of how that's all going to shape up. But I always have confidence that the stock market is going to get ahead of what is really going to happen out there. And of course, I think that 2025 are going to have some is going to have some pretty significant movements in the market, and you'll be able to see that at the end of the year when I do my year-end show, looking at the major markets. So that will be available for members level 1 to 4, probably the very end of December. Friday here, the market moved up pretty strongly again on this shortened holiday day. That a lot of buying came in the chip stocks as President Biden came out tougher on sales of semiconductor equipment to China. That would mean that they would not be able to keep up with the development here in the U.S. So the semiconductor stocks moved up. That moved the markets up with the leadership coming in that technology area. And overall, we're in this week of very positive seasonality, and that tends to win out over anything else most of the time in most years. Then comes after Thanksgiving, things tend to change. The bond market did have a good week, and we were looking for that upside rebound. And the metals market tried to rally last week, but then just got softer in this week again. Energy still weak as we're looking for crude oil to have another dip to the downside before making a very important low. And as I showed earlier in the show, cryptocurrencies were quite strong, with Ethereum really taking an upside leadership over what we're seeing in the Bitcoin market, though both of them strong. Bitcoin getting up over 100,000 on the futures, and Ethereum having a pretty good upside move. So if you're a fan of the cryptocurrencies and you're only watching this clip, go back and watch the whole show and you'll be able to see my analysis there on those cryptocurrencies. Let's get into the stock market analysis right now. And we're going to take a look at the charts that I share with our members. And this is the level 4 chart grid. So I'm going to show you what they get. They essentially get all of the analysis that looks like this when they get it, and then you can just blow it up and get all of the multiple time frame analysis. So here we are, having a very good upside day again. The S&Ps today here on Friday up 43 points. Now, for our level 4 members and for our other members, I sent out upgrades on a bunch of charts this morning. I didn't yet send out the upgrade on the S&P chart on the indexes because we were trading up at the high. So I didn't think it was right to update it. Then later on, I thought about it. So there's an update that of these charts that you're seeing if you're a level 4 member, and our team will put those static charts up for our other members in the next day or so. So you'll be able to see. Now, of course, there is a change in here. What's the change? Well, you can see the cyclic action in here is quite clear. And what we were looking at was that this period right in here was the period of risk, September through November. Well, what happened over here is that you got into late September, the Russell, which was right here, had its correction. The Russell chart made the correction right in here. S&Ps fell about 6% there. The area that we were looking for the bigger decline was 3%. So, either one of these corrections are really quite different than what my original expectation was for something much deeper here in September, November. I thought it would be 6 to 9%, 6 to 10%. This one, 6%. This one was really where I thought the decline would come, but did not. So when the market tells us, based on the shape of patterns, that what we had expected is not coming, or that something's different, then we have to change the analysis. I mean, the market speaks very clearly, and that's what I've done here. And then you can see that we were looking for the potential for a decline into the December correction we're looking for to be deeper, but now I don't even show that on the weekly chart anymore. I only show it on the daily because it is creating bullish configurations, bullish translations. You can learn about that in the cycle workshop. And then that does tell us that the market is likely to remain in this positive upward movement. So here you could see where that correction came on the in the Russell. You had the S&P 500 lose the upward momentum, but then it reestablished it here, and upward momentum is still very, very clear. Last week, we showed all the momentums on a 2-hour chart, which is a phenomenal look at it. We talked about the fact that it's bullish. I mean, it's just not telling us anything negative, and here's the market having another good upside week. It's just a little choppy, but still trying to make upside gains. Not a huge upside week, but it is very obvious the buyers are still there. So that's the weekly chart on the S&P 500. Here is the daily chart on the S&P 500 right here. And you can see in here in this cloud that we build that it got down here into support right there and then moved up again. Now, it built this island right over here. And sometimes when you get patterns that look like they have failed, like this one does, that first area that it fails from is a warning, and that it's telling you somewhere around there's some resistance. And if this wasn't the holiday week, I would think that this would be starting to give ground. So right over here, we're looking for this correction right over here on the daily chart. This takes you out here into somewhere around December 5th to December 10th right there. And I'll show you some other charts align with that very nicely. Take a look at the rhythmic cyclic action that you see in here. Let's just look at from this cycle right here. And you can see that rhythmic cyclic action does show you very clearly why the bottom came right in here. and then it began to move up again. And now we're just looking for this corrective period right in here. But the option bias indicator through this whole period, way back over here, looking out into last August, middle of August, where it turned positive, it went positive, neutral, positive, neutral, positive. It never got negative in here, and has been saying to bias your option positions on the long side in the S&P 500. So pullback in here likely to come. Not sure where the top is going to be. This might go higher, but this is right around 59.10 down to about 58.20 is where we would look for a pullback in here in the SPX. Take a look at the momentum here on the daily. This is the slim ribbon PO on the bottom, and that slim ribbon PO showed you that upside resumption right over here. It was just perfect, just like it did here and here. This one actually gave you a rally, but it didn't make it to a higher high. So that's really important information. Momentum clearly strong here on the slim ribbon, as you can see, and the slim ribbon, and on the daily, the reversal scout on the weekly, still in very positive configuration, very positive momentum. So take a look here. This is another variation of the 2-hour chart, similar to what I showed last week, but I want you to see how the daily cycle phasing is put in here over this 2-hour chart. Here is a positively configured daily cycle with the 2-hour built in here. And here you could see the slim ribbon PO on the 2-hour, which here gave you as positive and upside call right there. And again, the rising phase, corrective phase, rising, corrective, rising, corrective, rising, and the corrective coming right over here. And you can see the shape of this positive configuration, positive, positive, positive. This says to us that somewhere over here into this December 5th to 10th period, is likely to be a correction that holds above these levels. It would be a positive configuration, and it would make the next cycle out over here, rising phase, likely to get you to a higher high again. So this is the way that we look at the multiple time frame analysis, put together the sum of the evidence, and then get the highest probability. So the highest probabilities are that the upside continues with a minor interruption right in here, like you saw here and here and here in each of those cycles. So corrective phase coming in here, and then another rally, very likely to take out that high, which right now is at the high. 60.44 was made here on Friday, November 29th, so far early in the day as we look at that. So you can see those very, very strong phasing. Go back and look at all of this, put it together for you. And this is the weekly cycle configured positively, where this is the dominant cycle and barely could correct in here, momentum upwards and strong. In this case, the option bias indicator telling you to keep your option positions biased to the long side, and a very positive configuration showing here, which I just showed you on the 2-hour chart. Also, momentum strong, and this is how that short-term, this is how the daily cycle shapes up looking at it on a 2-hour chart. So if I only look at this section right over here, you could see the slim ribbon positive in here. When it gets into the corrective phase, it turns red on the PO right over here. Slim ribbon PO gives you the correction, turns neutral and positive again. And that's where we are right here in this positive rising phase, with the likelihood of this getting into a corrective period out over here that should go out December 5th to 10th. So that's a look at the SPX. I think it is very, very clear when you look at that about how positive it is. Again, in the NASDAQ, we remove the two scenarios because it's pretty clear. This is where that Russell low was right over here, and I'll show you that trough. This is where the S&P low was right over here. And now we're in this rising phase. It will take the daily patterns to turn negative for us to say that there's a top that's forming in the stock market. And you can see, based on what I'm showing you, that is not happening yet. There's this daily trough through early December. We thought that it would correct down into here. It still might, but pretty likely to hold above that low right over there in the NASDAQ, and then set up another move to the upside. So this minor cycle right over here is reflective in this right over here. These upward projections right over here are 21,422. This is 21,863, and this is 2,200 and around 22,400 right over there. So it's possible for it to get up over here. And then again, if it doesn't and it begins to fail, just like in the S&P 500, we would begin to see a negatively configured cycle. But here in the NASDAQ, even though it is way underperforming the S&P 500, it is still showing positive configuration, positive information. So if I look right over here, you will see, and by the way, before I go away from there, you can see the bottom warning right over there in the slim ribbon PO and in the option bias indicator where it turned orange and then gave you that bottom. And then if you look at these cycles right over here, you could see these positive configurations, which we are in right now, and a positive option bias indicator. Here you could see momentum on the daily chart is positive, very clear. And again, look at the quality of those upside resumption signals on the slim ribbon PO on the bottom. If you want that, become a level 4 member using our Give the Gift special, and then you'll be able to have that on your charts. And again, here's that same NASDAQ look. Now, if you look at the present cycle that we're in the NASDAQ, that one looks a little different. You see, it's not getting up to the high right there, and it's in this kind of long flag that you see forming in there. So if it gets out under this level right over here, let's just call that 2,600 roughly, 20,600, then you're likely to be in this corrective period that takes you out into early December. So it's the same kind of information that we have there, but it's possible the NASDAQ will lead into this minor corrective period. You can see here on the bottom, the market condition indicator, where this cycle went negative, but then it tested and became positive right there. Test positive, and right over here, we'll see what that next one looks like. But again, this has been mostly being able to stay quite positive, though lagging what we see in the S&P 500. Here is your Russell. Now, there's where that Russell low is right over here that I have overlaying on the charts, and you can on the S&P and the NASDAQ, and you can see that this rally phase in here is much longer than what we're seeing, because this is where the small cap and mid caps took over right over here on the upside in around mid-September, and then have been driving the market on the upside. So you could see how much stronger this is in the small caps than we're looking at in the NASDAQ, as money has flown out from those high caps, which are a huge portion of the S&P 500, moving out into other stocks. And this is just showing you that investors don't believe the top is here, but they're looking for ways to stay invested in the market and not be in those heavily weighted mega caps and techs. So they started to move many weeks ago into the small caps and mid caps, and that has continued. And RV in the Future Speak show has done a great job on explaining that all along the way, as that strength has shown up in the markets. Here you can see in the Russell a very, very strong pattern in here. And again, the timing in here is likely to see a pullback. This is 2365. This level here is about 2330. That's where the supports are. That lower level is 2301. If it can pull back in here, it really is giving a buying opportunity based on everything we're seeing. And I just drew in what the next probabilities will be on this next cycle. Actually, this would be the highest probability would be testing whatever high it made in here, then going into some corrective phase that was a positively configured cycle, not taking out the low, and then moving up again. If this actually changed and then took out the low over here, then we would have signs of a top. So we get great information moving back and forth between the weekly and daily pattern. So again, look at the option bias indicator, keeping you on the long side. Very important to have that level 4 indicator on your charts. Here you could see momentum on the daily, super strong, slim ribbon PO strong. There's your upside signal right there, says momentum to resume on the upside. Here is your 2-hour chart. And here I didn't do the overlays in here, because the charts don't line up anymore on the daily cycles. It's really in its own life here on the Russell, because there's so much buying coming in, but you can see positive right in here and kind of stalling, but a slight weakening in the Russell. And that's why I mentioned we'll be watching to see if it can, in a correction, if it takes out the important low. That's the low where that would be right there, 22.82. If it was able to get under there, that would be a bad sign and be one of the first signals of the market putting in a peak. So that is a look at the Russell, and that is a look at our grid right there. Let's take a look as we switch over to the market condition monitor. Now, this is included in our specials for level 3 and 4. So if you give the gift to yourself or to somebody else, they're going to be able to get this. I have this set on short term right now. So this is giving us the conditions in the market for the short term. And this, of course, says in the short term, these are all very bullish. The only one that is beginning to show a little bit of getting tired is on the short term is the IWM or the Russell. And that's because the shortest term right over here is starting to roll over on the reversal scalp. So that dings this, gives it a little down arrow right there, saying it changed from very bullish to bullish. That's in alignment with what I just showed you. Here's the intermediate, and you can see all of them very bullish, no change in here. No reason to be short in the market when you look at these, certainly as they're showing all the strength. If you're a near-term swing trader, just hours to days, you'd be looking at that, and these you can see are very bullish. But again, you can see in here the Russell is beginning to weaken just a little bit in here, as it's only slightly bullish. So that's look at that. Let's go back to the short term right over here, and let's just look at the symbols in here for trade setup conditions. The very bullish ones, let's just look at the top 10 or so. You can see them right in there. Again, you can, for level 4 members, you can use the notifications in there, and you'll be notified in any of the time frames when something changes in there. So you can see the very bullish ones there. And let's take a look. Are there actually stocks that are really bearish or things that are really bearish in this environment? Well, Arby showed you the EWZ early on. I think it was EWZ. So you can see these are the ones that are very bearish. Oil, look at Micron in this time frame where we have a lot of strong things in the semiconductors. Broadcom also not looking great. Corn, Devon, AMD not looking great. You see, those are very bearish, and they're getting a boost today based on the news that the U.S. is going to get tougher on selling China semiconductor equipment things. So the pop that you're getting in the semiconductors, really, when you look at this, it says, well, these stocks probably are sells when you look at Micron and you look at Broadcom and you look over here at AMD. Pops in those probably are sells. So I wanted to take a look at that so you have a very good idea at the things that we look at and what you can have by becoming an askSlim member. That's everything that I'm going to show you today in the stock market. Don't go away, because these are the holiday specials. Matt talked about these earlier in the show. This is the just fantastic give the gift, where you can give the gift to yourself or to somebody else. Huge discounts that we're giving in there. And check with your tax advisor, because you're going to, if you pay $114.75, you may actually be able to deduct that. But then we're going to send you back $20 even then. So this is just a great way. Level 2 holiday special, just $114.75. That's only $38.25 a month. And we're going to send you back $20. For level 3, you're going to be able to have that for $232, and we're going to send you back $50. And for level 4, you're going to spend $303.75 for 3 months. Again, that's only $101.25 before tax deductions, and we're going to send you back $100 in a Amazon gift card. So these are just absolutely amazing deals. You want to learn more about who we are, go to askSlim.com, look around at our broad amount of education and analysis content for that for both traders and investors.